Good afternoon, ladies and gentlemen. So my name is Evelina Kvedaraviciute. I'm representing both of the worlds colliding in this conference. I'm from practitioner side, from Bank of Lithuania, and also from academia at my role at Vilnius University, where I do research on blockchain and finance. And today it's my pleasure to moderate this discussion on future of finance. And let's welcome our very special guest, Mr. Shetty, who will present the vision of finance and beyond. Okay. Please.
Thank you so much. Thank you, Evelina. Thank you, David, for giving me this opportunity to come down to Vilnius and share this with all of you today. So really, the idea behind the Finternet, I've been part of the team that over the last decade has built out population scale infrastructure. These are systems that have rolled out to over 1.5 billion people in different areas of identity, digital payments, data sharing, and beyond. And what we learned through that journey was that the way we build financial market infrastructure is very purpose-specific. So you sort of build infrastructure for one use case, for one jurisdiction, for one sector. For example, the way we may settle money is different from how you settle securities, is different from how you settle other types of assets. And so we started to notice that as we wanted to solve for the needs of billions of users that were coming onto the digital economy, and they were coming on board with needs to transact with each other, this traditional purpose-specific approach where I sort of like to use the analogy, it's like every time we build a new car, we build a new road in the financial system. So imagine the complexity that arises from that. And if you look at efforts to connect these different roads, you just look at cross-border efforts that have happened across the world, in Asia, in Latin America. These typically take 5 years to connect even two countries' fast payment systems together. Now imagine 190 countries into 5 years. For one type of asset moving money, that's centuries, that's beyond all of our lifetimes. So it became very evident that we fundamentally need to think about a new approach to building infrastructure. And that's how the journey with Finternet started way back in 2021. And we published this as a paper in 24 last year, detailing it out. And really what we are solving for is a shift from having different silos. Even if you look at money, within the monetary system, you will realize you have different rails for transferring value between individuals, P2P, different rails for transferring value between individuals and merchants, different rails for transferring value between individuals and government agencies, federal, state, and so on. And that builds out a lot of the transaction costs that we see. And this is really expensive. You have 100 countries that have a population less than 10 million, and they can't build out, in many cases, infrastructure from scratch because they lack state capacity or market capacity to really build this out. And it's sort of like saying, every time you want to roll out a WhatsApp app, you have to build a new WhatsApp plus Android or iOS for each country you're rolling it out in, right? And so what we realized is that most technologies start off in this very purpose-specific manner. If you go back in time, you look at networks. Pre the internet, you had enterprises giving you purpose-specific networks, hardware, software combined. But when you needed to transact with the broader world, with broader humanity, you bridged onto the public internet. You saw the same with smartphones. You went from all of us carrying our own cameras to take photos, to it getting unified as part of a common playground and made programmable. And that's how you had social media getting created on top of that. So this idea of unification is very common when you look at technology from a multi-decade lens. And our view is in the financial system today, that's the point we're standing in. And so the real idea behind the Finternet is, we call it the 3 U's. So the first is, how do you give users, both individuals and businesses, control over their identities, credentials, and assets? And assets could be across the entire spectrum. So it could be regulated assets like money, central bank money, or private forms of money, deposits, stable coins, etc. It could be securities. It could be registered assets like physical property or a vehicle, anything that's backed up with a registrar. It could be attested assets, gold, silver, energy resources, anything that has third-party accreditations, ratings attached to them, or user-controlled digital assets. So across this entire spectrum, how do you really move that control back to individuals? And how do you do that? Really keeping in mind two properties. First is the property of verifiability, which is any counterparty should have the ability to verify authenticity, holdership, ownership, provenance of these identities, credentials, assets. And second is the property of transactability, which is I should have the ability to transfer, both in a financial context, like I'm transferring money to you or certain obligations to you, but also in a non-financial context, where let's say I'm transferring certain property rights to you, like ownership of a piece of physical land. So those are really two key parts, verifiability and transactability, enabled by users. And if you go back in time, I just want to think about the financial system, and you think about the world of paper, you actually had these assets represented in tokens. Look at cash, right? I mean, if you, let's say out here in Lithuania, you handed over 10 euros to me, that note is a token. It's a self-contained, self-describing object of value. And I don't have to talk to any third-party system to verify it. I can just look at it. I know it's valid, look at it in the sun or on the UV light, all the marks are embedded on it, and once you give it to me, it's mine. And same in the case of equity shares, same in the case of physical property documents. But what happened is, when we digitized these tokens, we lost that control, because now obviously you take that same cash token equivalent, you needed to represent it on some technical system like a ledger that was typically run by a bank, because as an individual you didn't have the IT infrastructure to run it yourself. And then their systems, you would have the assets sitting on one ledger, the verification logic sitting somewhere else, the validation logic sitting somewhere else. And now imagine for that same transaction where you just handed over 10 euros to me, you had to integrate my bank system with your bank system. And if that's cross-border, now imagine the complexity that comes in, right? So you could just hand over a note to me and transfer value, or now you have to do these complex integrations when we digitize these financial assets. And now imagine connecting that system with the capital markets, or connecting that system with property because you wanted to create an escrow flow, for example. A lot of complexity comes up. And so our view is, given the cryptographic developments, when you look at tokenization, public blockchains, digital signatures, it allows us to think about a world where you can digitally represent these objects of value with a lot of these properties that we want, but without the physical constraints, because obviously a 10 euro bill, I can't tear it up into 10 parts and have a euro each, or I'm constrained by how I can send it to you, carrier pigeons, etc., laws of physics. Out here, I can digitally send it to you. So that's one. The second is obviously across these different asset types, how do you unify? How do you unify to the end individual? So obviously, you're dealing with different governance requirements, different autonomy requirements of public authorities that may be governing these assets. And so we start to offer some sort of architecture to think about how you can unify it back to the end individual while ensuring autonomy for each of the authorities that are regulating some of these assets. And the third was building this on highly universal rails. So we'll shift from purpose-specific rails, asset-specific rails, to universal rails, but purpose-specific flows, which are permissioned depending on the type of asset. So regulated flows on top of fundamentally open infrastructure. And so across these different types of assets, as you now imagine the architecture of the Finternet, and I'll sort of quickly go through this, is you've got users in the middle, individuals or businesses. They want to transact, and so they have a whole range of interfaces or agents that they're using. On the left-hand side are what we call token managers. And so fundamentally, think of a bank. Today, that asset, like money, was represented on the bank's ledger, or in some cases, a consortium of banks came together and represented on their shared ledger. But in the future, they will be issuing those assets onto the user's ledger while continuing to retain control over the flow because recoverability, consumer protection, you need observability. But now what you can see is the user has a unified access, and not just read access or view access, but also the ability to transact across different asset classes, deposits, equity, real estate, so on and so forth. And now you can have third-party trust service providers that get added as part of the flow. E-notaries, e-guarantors, e-escrow agents. And all of this does require both a framework of existing laws and regulations, but also newer enhancements to come in. And here's a simple example. If you look at, I wanted to take an example outside of the financial world. You look at sustainability financing, and we're all familiar with the challenges of the costs of verification and the bilaterals that have to be created. But if you're looking at an ecosystem like this, you've got the user. They have installed a solar roof. When they installed it, a proof of that installation, a credential is issued to a user's wallet. The user goes on to get that audited by a third-party agency. That attestation is also issued to a user's wallet. And now the user can share that with, for example, a lender for green financing, or with a government agency for availing tax subsidies. So what you're seeing out here is the lender doesn't have to go and do bilateral integrations with each energy auditor or with each solar roof provider. It's all driven via the user, and that's what technology enables you to do. So very broadly, just to wrap up, when we think about this, we also need to look at this more holistically from the lens of what happens when things go wrong. How do you take care of dispute resolution? And our view is tokenization allows you to manage disputes, mediate disputes, adjudicate disputes much better because you now have observability of the truth. You have digital evidence that can be reused along with lifetime provenance. And so fundamentally what we're doing here is creating a playground for regulators to regulate, but innovators to innovate on the other end. And when you think of anything at scale, public authorities, you need some sort of checks and balances, will continue to play a critical role within these ecosystems. And our view is this also allows you to enhance regulation and supervision capacity, because today a lot of that is driven manually. People are supervising copies of the truth, and fraud is buried within that paperwork. But going forward, they can actually get access to the truth itself and then start to build supervisory algorithms rather than sending people to do random sampling. So there's a broad international community that's come together, both on public authorities as well as private sector. And we've set up a network of labs. I'm based in Singapore. We have a lab in the US, one in Switzerland, one in India, and one in Singapore. So if any of you are interested, feel free to reach out. Thank you so much.
Okay, thank you for this very concentrated presentation on such topic. Okay, so with all these highways spinning in different directions, like central bankers piloting CBDCs, DeFi community exploring possibilities of stable coins or AI revolution, data management revolution, and you accepted this challenge to unify it all together. So I would like to ask you what motivates you the most in this journey? What's your drivers? And also, what are the most challenging part in your view?
That is a good question, And the quest to unify is a common one. When I was listening to even Willy's presentation earlier today, where they're thinking about unifying across contracts, Stephen Hawking, what's a unified theory of the universe? So I think there is a group of people that start to think about how do you generalize a lot of the activities that are happening and boil it down to a new set of primitives. And if you have those primitives, then you can conduct a lot more activity on top because you can assemble those like Lego blocks. So really the motivation for me has been the belief that if we are able to achieve what we've set out to achieve, it has a transformative impact for individuals and businesses on the ground. Because you can actually empower them with control over their own identities, credentials, and assets. And when they have that control, they can choose who they want to transact with, how they want to transact, what are the opportunities they want to get access to. They're no longer constrained by saying, okay, I can only go to this bank branch, or these are the only options that I have. You're giving them far more choice, far more agency to transact with each other, and that allows them to build out their own life going forward. So for us, it's really a process of how do you use technology to democratize access at scale, at population scale. And if you can do that, then you can raise the equilibrium for all. So that's really the motivating factor. And obviously, as part of that journey, there are a lot of challenges. But that's fun.
What stands in the way? Banks or fragmentation or regulation?
Everything, all of the above. Everything you mentioned does stand in the way. But I think two things. One, there are powerful underlying trends towards this direction, which is important. And you have to design for where the future is going to be over the next 10 years. So we don't see this as something where the world will shift tomorrow. But if you ask me, is this where the world's going to be 10 years from now, 15 years from now? For sure. Otherwise we've collectively failed if we are still in the same equilibrium. So the world's definitely shifting there. If you look at the underlying trends on AI, tokenization, all of that's happening, the newer regulatory developments that are coming in, all of it allow you to imagine that future. And the question for us is really, how do we accelerate that transition? Instead of taking 50 years, can you do that in 10 years?
And coming back to regulated finance world, we do see some different directions. Like in United States, it looks like we going from a bottom-up approach, from stable coins, innovators. And in Europe, we do see these top to the bottom, like regulators testing innovations. So how do you see these two different approaches could work together, or should we need to choose one of them?
Yeah, that is an important question. And I think fundamentally that is going to vary jurisdiction to jurisdiction depending on the political and market economy dynamics that each of these jurisdictions have, right? So it's very hard to say which one is better because that's driven by people in those jurisdictions at the end of the day. And so I think it's about, for us, how do you design an architecture that accommodates both? So rather than opining on which one is the best approach, how do you allow for an architecture where people can join in a bottom-up manner so you can leverage animal spirits of the market? But at the same time, if there are top-down regulations, that too can be applied. And so one of the principles we call this is the principle of asynchronous adoption, which means that all stakeholders don't need to join in at the same point in time. It's very difficult to do within a country. It's difficult to do within a company. It's difficult to do within a country, let alone across countries. And so if you're designing, keeping in mind asynchronous adoption, then what you're going to do is design the infrastructure in a way where whenever you're ready, you can join. But when you do, you're connected to the grid. At zero marginal cost, you can connect to other asset classes, other organizations. You're not having to lay out a whole new set of pipes. And so if you keep in mind the principle of asynchronous adoption, then it allows for, whether it's a top-down regulatory regime or it's a more bottom-up organization or market forces, both of them can coexist.
So it looks like we are moving forward more unified financial markets. And this, I don't know, like if this tokenization and DLT is the part, like the main part of your vision, and how do you see if markets will switch to 24/7 global tokenized financial markets? What are the benefits and challenges, and how to balance?
Yeah. So I think the way I look at that is, at the end of the day, when it comes to, in addition to the use cases people often talk about, which is better collateral management, liquidity management, etc., I like to focus it back on what can individuals now start doing that they couldn't do before, right? And so, for example, can you democratize access to capital markets One of the broader ideas we have within the lab is how do you democratize the idea of ownership to everyone? So everyone could potentially be an owner. Today, one of the issues with equity markets is the high transaction cost. And not just technical. So the way I look at it is one part is the technical components you mentioned, tokenization, et cetera. But what's equally important is also the legal frameworks, the contractual, regulatory, and legislative frameworks around this. Because that can also be an impediment to fragmentation or not achieving the unified view for the end user. But I think if you look at it from the lens of what end users can do, you could now have infrastructure where people could participate, where one of the examples is, I was sharing this on the panel yesterday in London, where you have hospitals raising money through municipal bonds. And the issue with that is that's primarily, the investors are private equity firms, not residents in that area. And residents in that area have some pension fund portfolio, or they have certain equity portfolios that they are building up over a period of time. Could they allocate a part of that towards infrastructure projects in their own community, which also gives them voting control and say? So how do you incentive align the entire ecosystem? How do you create infrastructure that incentive aligns the entire ecosystem is very important, right? And I think as a lot more people are now going to natively transact digitally, that's going to become important as well. Once you do that, of course, back to your question, scaling what works, right? So let's say you build this out, 1 million people are using it. That's very different than if 1 billion people are participating in these systems. Because then you get into risks and crisis and what happens when things go wrong. And those can have ripple effects, socioeconomic ripple effects. And so that's where you really need to think about how do you enhance regulatory capacity, supervisory capacity, not in the traditional way of saying, hey, let's create barriers to entry, because that actually hurts inclusion, but are saying, hey, what if anyone can enter, but we'll detect fraud, we'll detect risks on the back end using data. So I think you do need some of those checks to come in, and that will again vary depending on the socioeconomic dynamics in different markets and different regions and what risks they're comfortable with as well. But fundamentally, I think the other shift that's also going to happen, driven by AI and AI agents, is that's also going to be a big enabler to unification. Because there were two ways you could think of unification. One is you have systems changing, like you say, okay, as a bank, you adopt this architecture, and therefore it gets unified. But that may have its own constraints, time lags, etc. Or you could have an agent doing that work on your behalf, just as you would have done it by running to different branches or digital portals. But obviously that was expensive. Now an agent can do it on my behalf. So I think the twin forces of tokenization and agents as they mature allow us to genuinely imagine a world where you can unify across the spectrum.
Yes, so it looks like it's not enough just to put stocks or bonds on tokenized ledgers. We are trying to improve and to more user-centric, democratize financial
like physical
system.
property. I mean, not just financial assets, right? Why can't I have complete digital transactability of physical land? And why can't, for example, if you look at newer generations that are coming in many cities across the world, they can't afford, actually, like I can't afford, in all the places I've lived in, I can't afford buying even a piece of land or a piece of an apartment or whatever in any of these places. But at least could I take a fractional part and allocate that into my portfolio? And not fractional the way it's done today, which is people create some sort of special purpose vehicle structure, and that has governance issues and all of that, but a very clear, transparent, observable, supervisable way where I can have a fractional ownership in asset classes I care about. Or let's say in the case of art, I really like Rothko, and maybe I'd love to buy, I can't afford entire painting of Mark Rothko, but a piece of it, right? And so I think there's also what we need to look at is there's a bottom-up effect. So if you look at what's happening in the crypto markets, is when people are coming into these markets, and some of it may look like a game, but what's interesting is they're natively getting accustomed to a lot of the ideas of investing and doing those transactions, doing digital transactions, and that's a lot of fluidity in how they're operating. And so now when they start to mature, they're going to expect the same from financial markets. But then moment they hit the financial market, they're going to be like, bombarded with the complexity of terms and licenses and accreditations and all of that. I mean, a simple thing, you look at most people, how they invest, they would say, okay, I have $5,000 a month, and I want to invest $5,000 a month, every month for the next, say, 12 months. They're not actually thinking about, oh, I want to buy X units of this stock and Y units of that stock, right? Now, today what happens is, for most people who traditionally invest, they think in terms of units because that's what the infrastructure supported. And that's what you then taught the population, or you taught investors, saying, okay, this is how you need to think, this is how you need to invest. But the new population saying, okay, I have $5,000, I just want to deploy that. Don't bother me with all your constraints, which are putting back onto me as an individual, right? So I think there's a fundamental shift that is also happening bottom up. And so the way we look at how people are participating in financial markets, or even newer types of financial instruments, is going to change over the next 10 years.
And maybe you could share more of these risk mitigation techniques, and if I am going to fund my company in this new Finternet world, I still would like to see some possibility to govern these systems. And what's your take of these like DAOs and new ways of governance?
Yeah, so I think, see, some of the governance comes, in my view, I like to boil it down to its primitives. So governance comes down to really aspects of human behavior, right? And so, like most things, human behavior, some things are very fundamental around what are the driving forces, driving needs, driving emotions. And so you'll see those forces play out no matter what system you use. If you're using physical paper, you will see fraud in physical paper. You're using digitized systems, you will see fraud in digitized systems. If we tokenize, you will have fraud in tokenized systems. So I don't think just by virtue of saying that we're adopting newer technologies and newer constructs, some of that will go away. You will have people who will come in to game these systems. It's very normal. So I think from that lens, it's important to realize that at a certain point, there are limits on technology. And you can't bake in all of that complexity into the tech itself, which is where legal frameworks come in. And we've seen that when you have, for example, hacks that take place, or you have, for example, social engineering attacks that take place, or you have, for example, frauds that take place. In each of these cases, you've had either the court system getting involved and other legal frameworks coming in to deal with those situations. So I think it's important for us to look at that, take a more pragmatic view, and use best of both worlds. But I do think over a period of time, like for example, think of today, one of the big shifts that are happening is the attacks are moving away from technical hacks because they're getting more robust, to social engineering attacks because that's a more vulnerable point, humans. Now in the future, I could have agents that guide me. So for example, I could have an agent that says, hey, you've never transacted with this person before, maybe you should be cautious, or here's a red flag, or for example, transact a smaller amount, or so on and so forth. So I think we should look at it, of course, one from the lens of regulations and so on, but also how do you scale out and give people newer tools so that too can act as a check and balance over and above much broader regulations that may cover various types of edge cases.
Okay, thank you. Very interesting, very visionary vision, and we also have this room full of practitioners and academics, and I believe we can build this vision together. So let's proceed to wider discussions, and thank you.
Thank you so much.